Welcome to Spiedel's California Minute. I'm your host, Catherine Sedan. This week we're covering filing tips for taxpayers whose wildfire postponed filing deadline is approaching on October 15th. Register for Spiedel's Federal and California Tax Update, where we'll be covering OBBBA provisions, Secure 2.0 Act changes going into effect in 2025, the new California Conformity Bill, and more. For details and to register for an in-person seminar or a live webinar, go to spiedel.com. For California taxpayers who were granted a Los Angeles County wildfire-related postponement of their filing and payment deadlines, the October 15, 2025 deadline is approaching fast. But there are a few traps that can catch practitioners and their clients by surprise. Many California pass-through entities received the postponement to file their returns, including the K-1s, until October 15, 2025. If the pass-through entity owners don't receive K-1s in time to file, they should estimate the pass-through income they'll receive and use that amount to timely file their own return. If their estimate is off, they can always file an amended return. The FTB and the Office of Tax Appeals have consistently held that the late receipt of a K-1 is not reasonable cause for a late filed return. But if the taxpayer can document the efforts they made to obtain the information and can demonstrate why they couldn't reasonably estimate their income from the entity, they may qualify for late payment relief. Because we're looking at up to 4 estimated tax payments being postponed until October 15th, the mandatory e-pay requirement may be an issue for some taxpayers who make those payments as one single payment. Unfortunately, the FTB does not grant an automatic waiver to the mandatory e-pay requirement for these taxpayers. All payments made by an individual or corporation, regardless of taxable year or amount, are required to be remitted electronically to the FTB after the individual has either made a single estimated tax or extension payment greater than $20,000 or filed an original return with a tax liability greater than $80,000. For clients whose combined estimates will be in excess of $20,000, we recommend splitting those payments into multiple payments below the threshold amount. Pass-through entities eligible to make the pass-through entity tax election were given until October 15th to make both the 2024 final payment that was due by the original due date of the return, which was March 15th, 2025 for calendar year taxpayers, and the June 15th prepayment to qualify to make the election for the 2025 return. Make sure these payments are made for the correct year, using the correct year for the Form 3893 payment voucher. If your clients are making payments with WebPay, make sure they're crediting the payments for the correct year. Also, make sure your clients don't combine these payments with their payments for other entity taxes that are due. And last, taxpayers are expected to track whether any payments made via WebPay actually go through. If a taxpayer schedules a payment that ultimately doesn't go through, for example, if 2 numbers in the account number are transposed, the taxpayer may not receive a notice of the failed payment. Taxpayers who are not aware that the payment never hit their account will not be granted reasonable cause for late payment penalties. Stay up to date with California tax law changes with a subscription to Spiedel's California Tax Letter. You can get more information on this monthly newsletter written by California Tax Pros for California Tax Pros at spiedel.com under Publications. That's all for this week. Join us next time for another episode of Spiedel's California Minute.